Hey everyone, welcome back to the channel. It's great to have you here as always. Today we're diving deep into a topic that's super important, especially if you're dreaming of owning your own place. Welcome to your ultimate guide on navigating the financial aspects of buying a home. Buying a home is a huge milestone, probably one of the biggest purchases you'll ever make in your life. And just like any major investment, it requires careful planning and a solid understanding of the financial side of things. That's exactly why we're here. In this video, we'll break down the essential steps you need to take to ensure you're financially ready to make one of the biggest purchases of your life. We'll cover everything from understanding your income and credit score to figuring out how much house you can actually afford. So, whether you're just starting to think about buying or you're ready to start house hunting tomorrow, this video is packed with valuable information that will help you navigate the process with confidence. Alright, let's kick things off by talking about income verification. This is the very first thing lenders look at when you apply for a mortgage. They want to see proof that you can actually afford to make those monthly payments. It's not enough to just tell them how much you make, you gotta show them the receipts. Typically, you'll need to provide recent pay stubs, W-2 forms from the past 2 years, and maybe even tax returns if you're self-employed. Lenders want to see a consistent history of income, so if you just switch jobs, be prepared to provide even more documentation. And here's a pro tip. Avoid making any big purchases or taking on any new debt during this time. Lenders are going to be looking at your debt-to-income ratio, and you want that to be as low as possible. So hold off on buying that new car or maxing out your credit cards. Next up, let's talk about everyone's favorite topic, saving for a down payment. Now, the magic number used to be 20% down, but let's be real. In today's market, coming up with a 20% down payment, especially for first-time homebuyers, can feel like trying to save up for a unicorn. The good news is there are loan programs out there that require less than 20% down, sometimes even as low as 3%. However, keep in mind that putting down less than 20% usually means you'll have to pay for private mortgage insurance or PMI, which adds to your monthly costs. But hold on, we're not done with saving yet. Remember, buying a house comes with a whole bunch of other expenses on top of the down payment. You've got closing costs, moving expenses, maybe even some furniture upgrades. So, aim to have at least 2 to 5% of the purchase price set aside for these additional costs. Alright, let's move on to another crucial factor in your home buying journey, your credit score. Think of your credit score as your financial GPA. It tells lenders how responsible you are with borrowing and repaying money. A higher score means you're more likely to get approved for a mortgage and snag a lower interest rate. Now, a good credit score for a mortgage is typically considered to be 670 or higher. But remember, the higher, the better. Even a small difference in your interest rate can save you tens of thousands of dollars over the life of your loan. If your credit score isn't quite where you want it to be, don't worry. There are definitely ways to improve it. Start by paying all your bills on time, every single time. That's one of the biggest factors that influences your score. Also, try to keep your credit card balances low, and avoid opening up a bunch of new credit cards all at once. So you've got your income verified, you're diligently saving for your down payment, and your credit score is looking good. Now it's time to talk about what lenders look at when they decide whether or not to give you a mortgage. First and foremost, they're going to look at your debt-to-income ratio, or DTI. This is a measure of how much of your monthly income goes towards paying off debt. Lenders generally prefer a DTI of 43% or lower. Next up is your employment history. Lenders want to see stability, so if you've been at your job for a while, that's a good sign. If you're self-employed, be prepared to provide even more documentation to prove your income is consistent. And finally, lenders will also consider the type of property you're looking to buy, the amount of down payment you're putting down, and the overall health of the housing market in your area. Alright, we've covered a lot of ground today, but here's the most important part, figuring out how much you can actually afford to spend on a house. Don't just rely on what a lender pre-approves you for, that's often more than you can comfortably afford. Start by taking a hard look at your income, expenses, and savings. Use a mortgage calculator to get an estimate of your monthly payments, including principal, interest, taxes, and insurance. But remember, owning a home comes with other expenses too, like property taxes, homeowner's insurance, maintenance, and potential repairs. Make sure to factor those costs into your budget as well. Don't stretch yourself too thin, just to get into a bigger house. It's always better to buy less house than you can afford than to be house poor later on. And there you have it, guys. We've covered the essential financial steps to take when buying a home, from income verification to budget calculation. Remember, knowledge is power, and by being prepared and informed, you'll be well on your way to achieving your home ownership dreams. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more tips on financial planning and real estate. Buying a home is a big decision, and we're here to help you every step of the way. Feel free to leave any questions or comments below, and we'll see you in the next video.